You're listening to New Retirement Radio, brought to you by the team at Prout Financial Design.
Hello, I'm your host, Certified Financial Planner, Dennis Prout.
I'm Heidi Cartwright, Financial Advisor and RICP.
I'm Deanne Jennings, and I'm here to share data and dive into the world of finance with you.
Advisors associated with Prout Financial Design may be either 1. Registered representatives with and securities offered through LPL Financial, member FINRA SIPC, and investment advisor representatives of CG Advisory Services, a registered investment advisor. Or 2. Solely investment advisor representatives of CG Advisory Services, a registered investment advisor, and not affiliated with LPL Financial. Investment advice offered through CG Advisory Services, a registered investment advisor, CG Advisory Services, and Prout Financial Design are separate entities from LPL Financial. Dennis Prout and Nathan Prout are solely investment advisor representatives of CG Advisory Services and are not affiliated with LPL Financial. The opinions voiced in this show program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriately qualified professional before making a decision.
WTCM News Talk 580. Welcome aboard to New Retirement Radio with Prout Financial Design live in the studio, starring Mr. Dennis Prout. Good morning, sir.
It is great to be here. Thank you, Ron. On Thursday, January 9, 2025, 2025. It's a pleasure to be here. It's almost radical being in the radios, the studio here. It's been that long. I guess
it's been
3
before
weeks,
Christmas?
right? Yeah. 2 weeks
yeah.
We were off. Actually, 3 total because we played the Christmas show twice, and then we also had the recording of
Social
Bob
Security.
Simpson, the Mr. Social Security, and he wasn't talking about the windfall election provision either. It's just nuts,
He was retired then, I heard.
Yeah, he's retiring or has retired.
Yeah.
Somewhere in there. He's in between. He's in between, kind of like Joe Biden,
Yes,
Joe
11 days to go there for
almost
Joe.
retired. How many days does he have left?
11, I heard, till
11?
the 20th. 11 days, yeah.
Yeah. Oh, there's the picture of them all, the funeral service.
So we've got, we'll just pop that up for a minute there.
Yeah.
There might be some really strong words said against each other,
Oh.
but we can come together like this over and over, unlike...
Well, that's just the narration. But look at the seating arrangement. You have Melania and Donald right next. Donald's right next to President Obama, right next to him.
Wow.
And then you have George and Laura Bush next to Obama, and then Bill and Hillary Clinton. And the front row, you have President and Mrs. Biden, and then Vice President Kamala Harris and her husband, Doug. But look at that.
Oh, that's
Trump
Doug,
and
her husband.
Trump and Obama right next to each other.
Yeah, their body language is saying they don't really want to speak to each other.
I don't think they're going to share many words.
I don't think I like you.
But it looks like Melania's seat was added. Doesn't it look like it's a seat they put on the aisleway to add?
Yeah.
Because she wouldn't fit into the... It looks like that. But anyway, it might not be.
Wow.
So,
look at Trump is talking to Obama. Amazing.
great drama.
I feel like Peyton
he's
Place
laughing.
here, you never know, It's a wild world when you have 5 presidents all there.
Imagine the security.
Yeah, it's got to be like 5 times as much, right?
The other interesting dynamic I just looked at, Kamala Harris is directly next to Jill Biden, and those two, there's no love lost between those two from what I read.
Really?
And they're sitting right next to each other.
There could be so many SNL skits about that. Couldn't that just be voluminous,
Yes, electric. But look at that beautiful cathedral there.
That is gorgeous.
My niece got married there. That is a piece of artwork, piece of architectural art.
Yes, indeed. Oh, there's Gore. Al Gore and I'm not sure about his wife, who that is next to him anyway.
Used to be Tipper, but...
Yeah.
All right, so the funeral is on. Today's officially a day of mourning. Today, Thursday, January 9th. If you're... What?
Sorry, it's just funny, the conversation, to me anyway, looking at it and talking about it. Well, if you do have a question of a financial nature, You're certainly welcome to text or call.
The same number works.
Yes.
231-947-0023, 231-947-0023. What have you done with all the females?
Yeah. Where have all the girls gone? It's almost like a song. Heidi and Deanna are both away this week. And Nathan is joining us. He's going to be doing the financial advisor, director of client accounts person. Oh, that's who you are at Prout Financial.
That's who I am, yes.
Yes, okay,
Nathan.
great. And you've been with us now.
Just over 10 years.
Just over 10 years.
Just Dennis and Nathan. No Heidi, no Deanne.
No Heidi, no Deanne. So it's just us guys.
No place for games. Now scram.
That's right.
We forgot to bring our cigars, Ron. I mean, I don't
right,
know.
yeah.
What were we thinking? So today we're talking about the outlook, long-term perspective on markets and economies, and a lot of great information I think that you'll find helpful because so many are wondering, tell us what's going to happen. And we've seen this movie before, according to this. I'm going to start this from Capital Group. Now, Capital Group has been in business since about 1933, 1934. Their first mutual fund started then.
Wow.
So they've been at it a while. Trillions under management. They are number 3, I believe, in the nation in terms of size. And they have a great reputation. One of their other funds started in 1952. Another one started in 1950. So they do have a long-term track record that's not easily replicable because obviously they don't have that kind of time frame. But their ability to manage money and also forecast has always, not always, I can't say that, is respected in the industry today. I'll just say that.
What do you call it? So when you say trillions under is it an investment fund or a mutual fund or what is that called then?
They're mutual funds, they're ETFs, they're private money management, all those different arms that they do. Now they're a firm that doesn't have their own brokerage firm. They've not gotten into that. All they do is manage money out of Los Angeles, and as far as I know, their office is still there. It's not burned down like everything else is.
Can you legally, if you're a wealth management firm like them, or I guess like you, could you legally have a tax partner, like a tax advisor? I know there's walls between some of these professions.
Mm-hmm. Yeah, we certainly could.
Seems like that'd be a good combo there.
I like that idea.
Thank you.
We've talked to several accountants, and
Ron's
they've all
had a
said,
couple of weeks to think about this.
Yeah. And they're busy enough on their own. They said, no thanks. They don't understand how good our coffee is, I think. I think that's really the question.
And the free chocolates.
Yeah. See how the conversation goes off into the ditch when the guys are alone. It's just terrible. So we've seen this movie before. We head into New Year. And what do you think about the Lions? I mean, isn't that amazing?
I tell you, I can't doubt the Lions after a few of their last victories. They find a way to win.
It was a mind blower. I don't want to talk about this investment stuff. The Lions are too much fun. Yeah. Seriously, I was so wrong about them. So wrong. Because I thought that the Vikings stood a very good chance.
Me too.
I didn't think they were going to squash them, but I thought it was, Lions would be lucky to win. And man, that was an amazing, intense focus of intensity, if you will, on the defensive end. Obviously, we all saw that.
And that's practically a third-string defense. They have a lot of injuries.
Oh, my gosh.
But you always talk about, not always, but you talk about goal setting or leadership. Look at Dan Campbell's impact on that team, getting them to believe that they are winners and they can win.
It's huge. And don't all of us need that? We need the positive talk into our minds and our heads because there is so much negativity out there. It's dynamic. So the difference you can make for yourself, the word of the day, if you will, and or the phrase, is get some positive input. We've watched his locker room celebration talk from the Vikings 2 or 3 times at the office. It's just fun watching.
Do you think you've talked goal setting? We talked about it Monday, and we had some positive quotes about goal setting. But don't you think that would be great to teach kids in school starting as early as kindergarten and make it age appropriate all the way through 12th grade? Can you imagine after 12 years of being taught and how to set goals, what would happen?
It was shocking to me when I got introduced to Nightingale Conant, because I had time on the road, because I was spending a lot of time visiting potential clients and clients in the early days of that positive thinking. What's his name?
Dale Carnegie?
Earl Nightingale?
Earl Nightingale, as well as Zig Ziglar.
Zig Ziglar
was just phenomenal in terms of, and then Brian Tracy as well. Brian Tracy is the goal setting. I consider him the absolute expert on that side of it. He is a crazy goal setter, but with achievements, what can be accomplished when you write those things down, when they're achievable, measurable, all those sorts of things. Yeah, when they're reviewed.
Yeah.
Yes.
You know what made us think about that real fast? Billy Strings, big-time bluegrass performer right now.
Okay.
He shared a work page from his kindergarten workbook, and it said, "When I grow up, I want to be," and then whatever his answer was, the teacher wrote in there, it said, "a bluegrass player," and then he scribbled in cartoon an image of a guy playing guitar. That's what he is today.
Isn't that incredible?
But that's what made me think, imagine in kindergarten if you got that start on setting goals.
I'll never forget, I was in Rick Stewart's office. Now, Rick Stewart, you know him, he directs the New Hope Church. Yeah. And on the back of his door is a picture he drew when he was in elementary school of these people singing and him directing. And I don't know what age he was, 8, 9 years old. It was phenomenal. I said, "You're kidding me."
Yeah.
He goes, "No." So anyway.
Wow.
Yeah. What a difference. All right, so the United States will have a different president in 2025, which we all know, but he looks familiar. Markets have rallied ahead of the new administration and its proposed economic policies, much as they did after the 2016 election. The U.S. economy remains strong, leading the world at a time when others are stumbling. China, obviously, Russia. Instead of falling into recession, as many predicted a year ago, we're headed back to the future in more ways than one. It was a great intro to think about this. Much like the Cold War era, U.S. leadership is being challenged. Conflicts in Ukraine and the Middle East, as well as tensions with China and over Taiwan, threaten to disrupt the world. Populist movements are gaining momentum, fueling a potential reversal of free trade policies. Now, what's interesting, they balance that out by saying previously, when there was all the threat of these tariffs, if you will, none of it really caused any significant inflation. In fact, it was, they're saying now it's a negotiating tactic. We'll find out. Who knows?
But you're saying it didn't cause inflation when? Prior?
Back in the first administration of Trump.
Oh, okay.
So sometimes the experience is helpful to those thinking about, what's going to be the real impact. Current U.S. equity valuations are high. That simply means according to earnings, interest rates, potential values given these companies. And prudent investors should be prepared for the possibility of a correction. Well, shouldn't we always? That's just common sense, I think. That's why we believe it's important to take a long-term approach to investing, seeking to achieve a balance between growth of capital and capital preservation. Now, capital preservation could mean bonds as well. And that's what they're also saying, that there could be an opportunity. And we always have to say could and be extra careful because we're on the radio and we have compliance listening to every word. Every word. What did you mean by that?
Hello, compliance.
That sort of thing. So because of that, they're saying they see an opportunity of declining interest rates. When interest rates decline, bonds tend to respond indirectly to those. That means that the values tend to rise. Now, Nathan had an interesting stat about that, and I'm going to put him on the spot if you can find it, about how the Fed has been cutting interest rates. But what's happened to the bonds since that time?
Yeah. So in the 3 months since the rate cut on 9/18 of 24, so these stats were from December, The 10-year U.S. Treasury yield increased 81 basis points. Since 1994, the only other time the 10-year yield has had a larger 3-month increase after a rate cut followed the January 1996 meeting, and that's according to Bespoke.
Yeah. So rather extraordinary that interest rates on the 10-year bond went up. That hasn't happened, you said, since 1996, was it?
That's correct, yep.
Now, most people would say that's a previous century, Ron. That's a while ago.
That is decades ago.
Yeah. Mm-hmm. So it's interesting to note that the market doesn't always follow what the Fed is saying. And this is one case where the Fed was probably a little bit ahead of the game in cutting rates. There are reasons to be positive about to be optimistic about the investment outlook, whether it's advancements in artificial intelligence, AI, or innovations in healthcare. But we must also be prepared for a downturn. In addition to stocks, bonds will play an important role as the normalization of interest rates returns us to a time when fixed income or interest rates can provide a measure of income, diversification, and ballast against stock market volatility. So in 2022, for those who were curious, both bonds and stocks were down for the first time together in 45 years. All together now, not so hot. That was a tough market.
Was that COVID related, post-COVID, or what was that back in 2022?
Oh, I think so.
No.
You know, it's a long time ago, Ron. Really?
Really?
Yes, it was the COVID late response to
Okay.
it. The markets finally finding their way, if you will. So, yes. The message I leave with you is a familiar one, and this was written by Martin Romo of Capital Group. Stay invested, but maintain a risk-aware approach. When faced with market gyrations or geopolitical uncertainty, the biggest mistake investors can make is to retreat to the sidelines. And I almost underlined that because that would echo Mr. Peter Lynch of the Fidelity Magellan Fund. Used to manage the Fidelity Magellan Fund way back when I just started in the industry, and talk about what a great reputation he had. He's since retired. So the opposite is also true. Don't rush in at market peaks. Successful investing is a long-term endeavor. Focus on your goals and don't let the daily noise distract you. Another great piece of advice, because we talked about that briefly here in terms of goal setting. I don't recall the noise having been quite as loud as it seems to be right now, given that we, might buy Greenland and or Canada. Just kidding.
Yeah, right.
Just kidding. What?
What?
So given the realities, everyone's preconceived notions about what Trump might say, I think got thrown out the window with what he's saying now. I think I can state that with relative, ease or accuracy. Who predicted that he would have been saying this? So we can't predict what people are going to say and or what the markets are going to do. But we can take personal responsibility for ourselves, if you will.
When you say just sit on the sidelines, does that mean don't put any more money into the market, or pull some out, or what?
Traditionally means like money market assets or CDs. Continuing to do that for right now is okay because interest rates are so good. But keep in mind, there will be opportunities down the road. We don't know how those are going to play out. Of course, we can't say. But for you and your portfolio, where are the opportunities that you can employ or even deploy?
So, what's a Treasury bill pay now?
It's about 4.5 or so.
It was over 5 for a little while.
It was.
Yeah. Okay.
So interest rates are trending down somewhat in terms of short term. And speaking of that, Warren Buffett owns more T-bills, I think we mentioned this a few weeks back, than the federal government at this point in time. So he's got a lot of money in cash. He liquidated Apple and some other positions. Part of his Apple stock. He still owns a significant amount. But what's interesting about that is he's a pretty good prognosticator in terms of value. So far, he's been somewhat right. but
Mm-hmm.
we don't know. He's most likely looking for other opportunities, but he's got basically a mutual fund now. He's got a mutual fund in terms of its size and in terms of the companies that he owns within. But that'll be interesting to watch what he does next, because he has been buying some smaller positions as well.
Does the investment world keep a close eye on what Warren does?
Yeah.
Yeah.
Yes, definitely so. They listen to him. For those who are more studious, if you will, they pick apart his annual report from Berkshire Hathaway.
Okay.
Oh, you betcha.
So,
So welcome to the Benjamin Button economy. The U.S. business cycle appears to be aging in reverse. For those who recall, it was a 2008 movie, The Curious Case of Benjamin Button. Film buffs will remember that the title character, played by Brad Pitt, ages in reverse from old man to young child, messing with all of our minds. But they're saying in this that the economy may be aging in reverse a bit. Everyone's trying to deign, if you will, what the heck is going on. The U.S. economy is going through a similar transition, says Capital Group economist Jared Franz. Instead of moving through the typical four-stage business cycle that has defined the post-World War II era, the economy appears to be shifting from late cycle back to mid-cycle, conveniently avoiding a recession. Now, in some respects, this is going to be a bit like guessing what the weather's going to be in the distant future, because I don't think there were many that would have predicted that we were going to have as much snow as we've had so far this year.
yeah.
That was chilly even this morning.
Yes.
Taking the walk. Whoa, like 12, 13 degrees. So trying to guess where things might go is a difficult thing, but it appears to be a mid-cycle economy. Is generally characterized by rising corporate profits, accelerating credit demand, softening cost pressures. We'll see about that. Eggs. And a shift toward neutral monetary policy. We've seen all four of these in 2024, Franz notes. Going forward, I believe we're headed for a multi-year expansion period. He says, I believe this, not Dennis. Not saying that I don't believe it. It's just interesting. Perhaps fending off a recession until 2028. 28.
That's quite a prediction, though. What is it, 20? That's 3 years out. They're predicting possibly a recession.
Right.
Oh.
Yeah. Who knows?
Even if they're right, how do you plan for that?
Well, we're talking about investing and understanding the impact of diversification. But in terms of a deep cycle recession, they're saying the chances of that are almost nil. They're saying that. Okay? So it's interesting to note what they're saying. Sometimes that can bolster our confidence. Sometimes it can say to us, what should I look at in a long-term return cycle in terms of an opportunity here? AI is still blowing people's minds. NVIDIA. I'm not supposed to mention individual stocks.
Well, this is what they're doing. We're not necessarily recommending that you buy it.
Thank you for saying that. Thank you. See? So, do we have a phone call as well?
We have a text message for question, and then we have a phone call.
Okay.
Regarding a correction, they say if a correction is defined as a 10% drop, haven't we already had half of a correction with the Dow down by 5%?
Yes. The market is off its high. And that's a great point. Because its high, I believe, was 45,000 as measured by the Dow. It's about 42.5 right now.
Okay.
Most people would say it's about a 5%.
So half a correction. Does that mean the other half's on the way, or that we're only just going to endure a half a correction?
I don't know.
Right.
If we could tell the future, Ron, we probably wouldn't.
Yeah, that's right. A half is 25%. So what does that have to do with the price of,
That's it, right.
radishes? I have no idea.
Abbott and Costello.
All right.
Rich is on the line from Traverse City for Dennis and Nathan Prout. Good morning, Rich.
Good morning.
Yes,
Good
sir.
morning, Rich.
Hey, I have a quick question. I'm invested in the S&P 500, but I wonder if Dennis had an opinion on whether it's kind of like a Ponzi scheme, because if everyone in the country buys the S&P 500 every month, isn't it always going to go up?
Well, you do have good demand, that's for sure. Now, a price going up. I mean, you make a great point. Now, a Ponzi scheme is not
And I
an
don't
increasing
mean that,
price.
I don't mean that literally. I'm just,
Yeah.
if everyone buys it every month, isn't it always going to go up?
No, it's not always going to go up. Of course, what you're saying, I think, is, well, given that much demand, is the price increase artificial? Is that what you're asking? Yeah.
To say that
Oops, sorry about that.
That's we're not there. We're here. Sorry, Ron, I'm giving you a hard time. So, given that we've had increasing demand, it certainly is a indicator and or a push toward rising prices. But like anything else, the weather can change. The weather changes. And if for some reason the economy should start to falter and or, confidence should start to wane or rates start to go up or whatever it might be, or we have worldwide conflagration, if you will, all these kinds of things could blow up. Probably shouldn't say that.
But you could have a record number of people investing in the S&P 500 every month, but you say there could be something that could cause the value to drop.
Absolutely.
No matter how many people are invested.
That's correct. Okay. Because they'll start moving. They'll start moving the other way, and they'll vote with their wallets. So that could also mean that a deep, deep correction could be much deeper because of those same people bailing on that economy or on that price. So for right now, it makes a great point in terms of lots of dollars going in from people investing in their 401ks, simple IRAs, all the rest. A lot of money invested in qualified retirement plans throughout the United States. Significant dollars. I think it's about the same size as our federal debt.
Well, and you're also starting to see not a ton, but a little bit of that money is starting to come off the sidelines as well. People who have had it parked in like treasury bills or CDs, especially when they see what the markets did in 2024, have certainly been more inclined to start bringing some of that money back into the picture.
They have. Yeah. And as they see some more values. Now, there are many different ways you can decide to enter back in. Maybe it's a monthly basis. Maybe you dollar cost average in the same way you got out, perhaps. So there are lots of ways to enter something and or to control the risk. Where are the opportunities? Everybody's looking for that. The Federal Reserve's rate cutting cycle could be a powerful tailwind for investors in what is shaping up to be a healthy environment for both stock and bond markets. Against a backdrop of slowing inflation, generally healthy consumer spending, and strong corporate profit growth, the U.S. economy is on track for continued expansion, they say. President-elect Donald Trump's policy priorities could further bolster growth in the coming months. Among these are regulatory reform, tax cuts, and increased defense spending. So there are a lot of drivers that could potentially drive this thing more positive. That and including more conservative investments, perhaps municipal bonds, that sort of thing, which we'll get into in some more detail here. So for those who want to control risk, you don't have to be way out on the limb to participate in an economy like this. Always recognizing, of course, your own risk tolerance levels. But what a great time to review and take a look at how am I doing? Where am I at? What's the opportunity? Where are those opportunities? I was talking to our economist, Rob. He's about 81 years old now. And we were talking yesterday about the energy and the challenge and trying to look at the economy. But it is an always moving target. Studying this and looking at it. And it is a wonderful challenge and a part to be in this financial realm, if you will, in terms of what it is we do. We just love it. It brings us energy. Right?
Economics is fascinating.
Oh, it is.
I know very little, but the little I know, it is. Can I read one text message?
Yes, sir.
To you?
Please do.
This person says, I asked my current financial planner if the administration power at any point in time does give confidence or low confidence in the market. He said, no, not really. I suggested there was high confidence since Trump was elected, and that it will and should have better markets overall. He said Trump and his policies have no influence on the market. Is he right? So Trump or anybody, does the president or an incoming president, by what they say or what they announce their intentions are, influence the market?
I don't know what he's going to say, but Nathan wants to take this one first, and then I'll follow.
So, yes, sometimes, right? But more importantly, where do the opportunities lie for you? So even if Kamala had won, we would be doing a show right now about where the opportunities exist in the market for the upcoming year of 2025. So yeah, we might be talking about maybe some opportunities in clean energy. I don't know, right? But there, with Trump, we're talking, we're about to get into some opportunities that exist in AI and some other opportunities that might make sense for you, of course, depending on your risk tolerance, your portfolio, your time horizon, all of the compliance things, correct? But to say that a president doesn't have any effect on that is a little short-sighted, but at the same time you have to balance it, because he or whoever is sitting in that seat does not fully drive the economy by any means.
Yeah.
So
I love financial guys, investors. They're like robots when it comes to politics. I mean, it's like, doesn't matter who's in, we'll just shift gears and say, where are the opportunities now? How do we shift according to what's happening with the election?
It doesn't mean that we won't be sad or glad depending on what the results have been, that's for sure.
Right. But you put all that aside, and it's like,
that's right.
Get down to business.
Absolutely. So you have to make adjustments. And what's helpful about that is there were several. Do we want to wade into politics? I'm just going to say it. Well, when Obama was president, many of our clients are really quite conservative. They were very concerned that it was basically going to be very, very difficult sledding. And in retrospect, it wasn't nearly as difficult as many had said. So, yes. On the other hand, it's not as direct as a Dan Campbell influence directly on his guys. He's made a huge difference. All you have to do is watch. You can see. I mean, his guys play like it means something. But it can have an influence over time. If someone's a cheerleader saying, we need to move forward here, it's all amazing. We mentioned it already. The change in tone and what's happening already as a part of the Trump readiness, if you will, for the presidency. It's changing a lot of things. A lot of people are doing a lot of things we hadn't anticipated, including Zuckerberg from Meta.
Yeah.
So that's just one great example, I think.
Yep.
So, yeah, it can have an impact. Debt, U.S. government debt. Are we at a tipping point? Debt could surpass 100% of gross domestic product for the first time since World War II. That was back in 1944. So that graph right there, Ron, shows you the level of our debt.
That's painful.
Yeah, it is painful to look at. Now, how high is too high? That's the pivotal question as concerns over U.S. government debt levels rise to the fore among the public and investors. Total U.S. debt exceeded $29 trillion in the fourth quarter of 24, or approaching 100% of GDP. Now, my number says that it's closer to 35, 36. I'm not sure where that $29 trillion comes from. But anyway, as an indicator, it's interesting to note, you had mentioned gold. Now, we don't know where gold is going to go. We know what it's done in the past. Now, in 2015 to now, 2015 gold's at about 1,000 an ounce. Today it's about 2,600. That's 11% a year it's increased since 2015. That's an indicator of concern over the currency. The Dow Jones Industrial Average up 10% a year since 2015. That was surprising to us as we looked at this. Silver up 8% or so per year in that same time frame.
Wow.
So commodities, as well as the markets, have really done quite well. But they're rising in concert together, in harmony. Harmony.
Harmony.
Artificial intelligence may be overhyped and bigger than you think, and bigger than you think. We tend to overestimate the near term and underestimate the long term. I was thinking, honestly, this research is just phenomenal, and handing out to those clients who would like it. So the mega trend, PC users in 2000, internet users in 2000, was expected at for PC users 225 million. It was actually 354 million.
From when was
that? From 96 to 2000. In 4 years, it went to 354 million users, where they had thought it was going to go to 225. So a 36% increase from estimates. Internet, 58% increase. 152 million from 96 to 2000, they were thinking, was the prognostication, the
forecast. Yeah.
Forecast, thanks. Why did you use a regular word there, Dennis? I'm trying to. So the actual was 361 million, more than double.
Yeah.
More than double. Mobile, smartphones in 2013 predicted to be 657 million from 10. So from 2010 to 2013, predicted to go to 657 million, went to 1 billion, a 36% increase. And then the cloud, 90 billion to 115 billion from 17 to 20. So in 3, 4, 5 years, the estimates here are probably higher, low than compared to what they ought to be in terms of AI and the generation of that.
With that kind of growth too, and like just those products or services you mentioned, does the price come down? Like generally, like if
for speed, absolutely,
because we're making so many phones, demand is so high, the price comes down, more people can buy them.
Exactly. So the prices tend to get compressed.
Yeah.
As you get more, they become more acclimated to production, and possibly the components that go internally to that go down as well. AI supply chain hosts boost old economy companies. AI opportunities in tech stack and its supply chain. So it's not just the tech stack itself. It's not just the hardware that goes into making these quantum type computers. It's going to be energy, power demand going through the roof, construction materials through the roof, because they're building all of these data centers. Who would have thought?
Yeah.
I mean, I talked to people from the power industry. They just, it's almost, they're saying it's blowing our perceptions away of where power needs were going to be. We talked about this years ago when we attended a TD Ameritrade conference back 10 years ago. The prognosticators and or those who, predicting the future were saying, listen, I mean, they were the powerful ones too. And we were listening. There was a crowd of 8,000 financial advisors in that room. And they were saying, listen, we think in 8 to 10 years that power companies are going to have to buy back the power from individuals because we're going to get so much production out of solar and wind.
Oh, jeez.
Isn't that funny now to say? Because of not only the production capacity of that, but the storage capacity of batteries and all the rest. Well, battery storage has increased dramatically. We get that. That's moving well in the right direction. But what they hadn't thought about was the power demand of industry itself, the power demands. So copper, energy, capital equipment related to providing that. We talked, I think, 4 to 6 weeks ago, in the copper alone that went into a data center that Microsoft just built I think it was in the Chicago, Illinois area, more than 2,000 tons of copper. 2,000 tons. So these numbers are just removing a lot of preconceived notions about what the demands for that are going to be and how we might participate in those basic economy stocks as well that provide supply or supply those industries.
I wonder what companies make. I think they're making mini nuclear reactors now that people like companies like Amazon or Microsoft saying, we're just going to buy our own mini nuclear reactor to power up these data centers.
Yes.
And I wonder what companies make those, because that might be a thing of the future.
Right now, they're in the private sector. They're not necessarily publicly traded, but all the supplies that go along with that, or the materials.
Yeah.
There you go. So potential beneficiaries of that are relatively wide. So Nathan, some stats.
Yeah, so the worst Fed day ever. The S&P 500 fell 2.95% on December 18th when the U.S. Federal Reserve's cut rates by another 25 basis points, but forecast fewer rate cuts in 2025. It was the biggest one-day drop for the S&P on a scheduled FOMC meeting day since 1994, when the Fed began announcing its rate decisions on the day of its meetings. And then 'tis the season. Over the past 50 years, the S&P 500's median performance from the close prior to Christmas through year-end has been a gain of 0.24%, with positive returns 60% of the time. In the 9 years when the S&P 500 was up 20% plus year-to-date heading into Christmas, the median rise of year performance has been a gain of 0.82%, with positive returns 8 times. The Dow Jones Industrial Average declined 2.6% on 12/18/24 for its 10th straight daily decline. The 10-day losing streak was its first double-digit losing streak for the Dow since an 11-day streak ending over 50 years ago in October of 1974.
Wow.
And that was toward the end of the last, well, not the last, a significant recession from 72 to 74.
Yeah.
It was a rough market in that time frame.
Yeah. So that's all we have for today.
As always, you guys, our listeners, can check in with Prout Financial Design, and if they want to make an appointment, they get a complimentary sit-down first time.
They do 231-947-3992. Speak with Melissa. 231-947-3992. Thank you, Ron.
Alrighty, I was playing music to trail us out here, and it's disappeared. There it is.
All right.
Jeez. All right. Thank you, Dennis Prout. Thank you, Nathan Prout.
Thank you, Ron.
Thank you, Ron.